Professor Huang, thank you for joining us, and we're going to listen to your presentation.
Thank you very much, Watanabe-san. Thanks for having me on this panel. My opening remarks will probably focus more on what is happening in China and the challenges in this particular area. So I will make two comments and then draw implication at the end. The first comment is that the digital technology is really transforming the Chinese economy. And it is already a very big part of the economy and having impact in almost all directions. The most important area which I've been spending lots of time looking at is digital finance. So you're taking advantage of the digital technology, things like big tech platforms, big data, AI, cloud computing, and so on to facilitate financial transactions. This originally started from 2004 with the release of Alipay, which now is very popular now. But over the next 15 years or so, it has become a really a main theme in the financial area. The most important contribution of digital technology to finance is really promotion of financial inclusion. As we all know, it was very difficult to provide financial services to the small, medium enterprises and the low-income household. But the digital technology made it possible for two reasons. One is the big tech platforms has this feature of long tail, and which enables the platforms to reach gigantic numbers of users on the platform. So for instance, we have Alipay and WeChat Pay. Each of them has around 1 billion users at the moment. The second very important feature is that once you're online, you start to accumulate the digital footprint that can be used actually as an important way of assessing your credit risks. So this is why we find that today in China, on the one hand, while traditional financial institutions found it difficult to provide financial services to SMEs, to individuals, especially in remote areas. Today in China, as long as you have a smartphone with telecom signals, you can enjoy almost the same kind of financial services. That was a significant change, and we're seeing progress in mobile payment, in big tech credit, and in insurance, in online investment, and the PBOC will soon release its own digital currency. So it is really changing the world. And specifically, for instance, number one, the big data credit risk assessment. I and my colleagues last year did a research with economists from IMF comparing the effectiveness of big data supported credit risk assessment model and the traditional model. And we in fact found that these for these smaller enterprises and for these low-income households, the big data approach worked much better in predicting a default. This was one of the examples of financial inclusion, because the sample we looked at, like 1.8 million borrowers, only 7% of the borrowers ever borrowed from the banks, and 93% never were able to access to bank credit. So that was quite a significant change in terms of financial inclusion. It is also changing macroeconomic stability. So for instance, last year, at the time of the COVID-19, when social distance and lockdown were the only effective ways of controlling spread of the virus, digital finance continued to serve the individuals. With the mobile payment, the money is already on your mobile phone. There was no need to go to the bank to get cash. The big tech credit continued to extend grant loans to SMEs and individuals and so on. So that certainly served as a very important mechanism for macroeconomic stabilization. The second example is when you look at China, for instance, the volatilities of inflation, you find there was a significant dividing line around 2012. Before that, CPI was very volatile, and after that, CPI became a lot more stable. Again, my colleagues and I did another work with economists from Bank for International Settlement, and we found that stabilization of inflation was really contributed by the digital economy. Mobile payment, e-commerce, and logistics basically brought together the regional markets together and even more closely, and that helped to stabilize the macro economy. So this is really changing the way the Chinese economy operates. Not just to improve efficiency and improve user experience, the most important thing is financial inclusion, helping the low-income household, the SMEs to develop. That's my first point. The second point, obviously, this is still at the beginning, and we have a lot of policy issues and rules we need to address, and I'll just list some of them. Number one, I think everybody would agree there is a big question about data policy. What is the proper balance between big data analysis and the protection of privacy? And there obviously is a trade-off between the two, and how to find a balance is still something we're struggling with. And I think many other countries are also struggling. If you don't regulate, then there will be some benefit from big data analysis, but there will be a lot of examples of abuses of information. The second policy issue is how to balance between innovation and financial stability. Innovation was very important in cases of mobile payment, big tech credit, and so on. But if you don't regulate it properly, there could be significant financial risks. And we had a good example in China, the peer-to-peer lending area that became a big mess. But if you regulate the financial activities too strictly, then there will be no innovation. So how to find a balance we're still struggling with. The third issue, which also became quite popular, heatedly debated in China today, is how to regulate these big tech platforms, especially in terms of monopoly. It's the older way of looking at the market share, the older approach of bringing up the large companies, the appropriate approach in addressing the monopoly problems. We are still in the debate, so I don't have a clear answer to offer. But I do think digital economy is different, and we shouldn't really just rely on the old-fashioned approach in addressing the same problem. So these are the two main points I want to share with you. It is revolutionizing the Chinese economy, but we also face a lot of policy issues. Now, to draw the conclusion, I actually want to say this development is very important. In my own sense, if you look at the globalization, the first globalization was really facilitated by reduction of transportation and communication costs, like following the first industrial revolution. So goods service trade was the main theme of the first wave of globalization. The second wave of globalization we are talking about is the current one, which in my view started from 1971 when President Nixon delinked the dollar from the gold. Everybody's exchange rate became more flexible. That started a wave of free flow of capital across the countries. That, in my view, was the second wave of globalization. I think if digital economy really gains momentum and the world could become more connected through the digital channels, then this could be the third wave of globalization. But I do think there are a lot of jobs need to be done before digital trade can really develop in an orderly way. So this is why I think this panel is very important, and I would love to hear other experts' insights on this particular topic. Thank you.